Hello champions, how are you all? I hope you have completed the basic concept chapter with the question and answers, and I hope that you have already made the summary notes of that particular chapter. I'll try to give the summary notes of that particular chapter as well, but at the later stage. As of now, you have to make your own summary because at the time of 1.5 days of the exam leave, whenever you read your own summary, you will be able to grasp it more, okay, and it will be easy to revise more. Okay, now starting with the third chapter, that is the PGBP. This is the most crucial chapter which will come for sure 14 to 16 marks. The first question, that is the compulsory question of 14 marks, comprises of the PGBP only. Majorly, it is the only question chapter which comes in the first question, that is a compulsory question as per the trends of the ICI. They might change it, but as per the ICI trend, last few years, this is the only question that they are asking from. Okay, the chapter PGBP. Now, starting with this particular PGBP chapter, first you have to understand what we are going to discuss in this chapter. Okay, see, first what they are discussing. Just a second, the screen is going. Just a second. Yes. So what we are going to study, see, profits and gains from business and profession. So first we need to understand what is a business or what is a profession. So whether these two words have been defined in the income tax act, yes, the two words have been defined under the income tax act, but in more detail the business is described, but profession is not described at all. What they have described, see, the section number 2 clause 36 says that the term profession is usually the term profession is not defined under the act, but it means an occupation requiring some degree of learning, and it includes the vocation. This is what it is written in the act. What it is written, that it is an occupation, okay, requiring some degree of learning, whether it is a professional learning, okay, or it also includes a vocational. It also includes the vocation like a skill based profession, okay, like acting is what a vocation, okay, or if you do any kind of artwork, it is a vocation, okay. It does not require any some degree of the learning. You do not require some degree, but what you require is some skills. So it also includes the degree plus skills, whatever you are doing from by learning of a degree, or includes any kind of a skill, okay. It is what a profession, whether it is a medical profession, whether it is an accountant profession, whether it could be an any kind of profession. Understood? This is the clause number 2, clause 36, where the profession has not been exhaustively defined, but it is defined in a very short manner, that it is an occupation requiring some degree of learning, and it also includes the vocation. Understood? Now see, under 2 clause 13, the business is defined, but the business term is also like a, just you have to read it and you cannot do anything, because what they have said, that the business includes any trade, commerce, or manufacture, okay. Either you are doing any trading, or you are doing any commerce, or either you are manufacturing something, or doing any adventure or concern in the nature of trade, commerce, or manufacture. Means whatever you are doing in all, in general way, what you are doing, either a trade, any trade, commerce, or manufacture, or related to anything related to these three things, okay. These all are what termed as business. So business is a trade, commerce, manufacture, or adventure is of any kind of the nature or in relation to the trade, commerce, and manufacture. So these are the two terminologies, not very much important, okay, but we have to move forward. Now what they have to say, now they have to say that important understanding, that it is however not material whether a person is carrying on a business or profession or vocation. In actually, as per the income tax act, na, that does not it does not matter whether you are carrying a business, whether you are carrying a profession or vocation. They does not matter, just they matter for the purpose of an assessment, okay. The taxability is going to be the same, the taxability is going to be the same, but they just want to know that whether you are earning the revenue from the business or profession. Just they want that particular bifurcation for that particular purpose only. Otherwise, in the whole chapter, you will see no difference. You will see no difference whether the company is doing the business or company is doing the profession. A person is doing the business or person is doing the profession. Only some related concept will differ because of these things. Otherwise, the whole PGAP is going to be the same. Does not matter whether you are carrying on the business or profession, but something will change in certain kind of provisions like tax audit provisions and presumptive income provisions. If you have already known what is the presumptive income provisions, then you know it. Otherwise, all the things have been covered here. Whether the rates and threshold limits are different for the business or profession, because in that presumptive taxation, if you know, then the rates is changed, threshold limits are changed based on the whether you are carrying on the business or profession. Otherwise, all after these two or three provisions, every provision of the PGBP is going to be the same. Okay, now moving forward, what is the meaning of profits? What is the meaning of profits? Now we have to understand what is profits. Understood? No. See, whether profits are realized in any form other than cash equivalent of such received must be taken as profits. If it is realized, what it is said, realized. Whether they have said unrealized profit, whether it's cash or cash equivalent does not matter, but it should be realized in cash or any other method, but it should be realized. Unrealized profits are covered here or not? Tell me that. No. So whatever the unrealized profits, whether it will form part of PGBP or not, no, it will not form. It will not form part of the PGBP. Understood? Now, generally capital receipts are taxed in the capital gain unless specifically mentioned in this in the section. What does it mean? Now, come into the board notes, okay, and write the PGBP heading. Profits and gains from business and profession. Business or profession. It is our lecture number 3. Okay. So write it down, lecture number 3. Okay. Now understand me very carefully. There are two kinds of receipts. Okay. You all are accounting students. So I must understand that there are two kinds of receipt that you all know. That one is what? A capital receipts. Second is what? The revenue receipt. Correct? Correct. Now, as per the provisions of Income Tax Act, for all kind of capital receipt, there is a chapter called capital gains. If you are earning any kind of capital receipt, then it is going to be taxed under the head of capital gain. And if there is any kind of a revenue receipt, then in the general law, it is said that it is going to be taxed under the head PGBP. It is going to be taxed under the head PGBP. But listen to me very carefully. But listen to me very carefully. What it said that usually the capital receipt is going to be taxed under the head capital gain, but there could be some provision. There could be which specifically mentions that capital receipt shall be taxable as PGPP. If they specifically mention, if some provision specifically mentions that the capital receipts are going to be taxed under the head PGBP, then only you have to tax the capital receipt. Otherwise, all the kind of capital receipts will go under the head capital gains and will not come under the head PGBP. And all the revenue receipts are going to be taxed under the head PGBP, whether you understood this particular part or not. Usually this is the general rule. This is the general rule. But for the capital receipt, there could be some provision which says that this kind of capital receipt shall also be going to be taxable under the head PGBP. So you have to tax as per the PGBP only. Understood clearly? Yes. So the point number two is this, which says that generally the capital receipts are taxed under the capital gain unless specifically mentioned in the section. Okay, now payment voluntarily made by a person who were under no obligation to pay anything at all would be income in the hands of the recipient if received in the course of business or profession. What does it mean? What does it mean? That if someone is paying you voluntarily, who is under no obligation to pay anything at all, if I am paying something voluntarily, that means only I do not have any obligation to pay you something. If I had the obligation to pay something, then it was not the voluntary payment, correct? Because then it would be a payment under an obligation. But if I am paying something voluntarily, then also it is going to be taxed in the hands of the recipient received in the course of business or profession. If it is not received in the business or profession, then we have to see for any other thing when it is going to be taxable. If it is not received for the business or profession, then that particular income is going to be taxed under the head other sources. Understood or not? Clearly, because that was the residual income. Okay, so if they even making for the voluntary payment and you are receiving it for the business or profession, then it is going to be taxable under the head PGBP. Sir, what is this kind of income? Please explain us. Point number three is not like you. I have to explain this particular income. Suppose there is a business, okay, a restaurant business, correct, where you go and eat the food, and after the bill came, the bill amount was suppose 1097. The bill amount was 1097. Under just a second. Yes, 1097. You paid 1100. You paid 1100 in the round figure. The balance 3 rupees of the income, the balance 3 rupees of the income is paid voluntarily by you. Is paid voluntarily by you because you have no obligation to pay anything. You have the obligation to pay 1097 only, but you paid in the round figure, that is 1100. Okay, so it is received in the business or profession or not of that particular restaurant? Yes. So for that particular thing, in the hands of restaurant, 1100 is going to be taxable, not 1097. The profit is going to be 1100, excluding the expenses. Okay, everything is going to be 1100. This is the amount that is going to be taxable, not 1097. Either you have paid the 3 rupees voluntary, the restaurant business cannot say, see, I had made the bill of 1097, that particular person has paid it voluntarily, so my income should be 1097. No, it should not be 1097, it should be 1100 only. The payment voluntarily made as well will be considered as a receipt of the business or profession. Understood this particular point as well? Shall I move forward? Yes. It is necessary to carry business or profession at least some time during the accounting year, but not necessary throughout the year and not necessary by the assessee owned personally, but it should be under his direction and control. So what does it saying? What it is saying, that if you are talking about the profits, okay, profits from where? Business or profession. So whether I have to carry on the business or profession for the whole year, no, it is not necessary. Whether I have done for the business of at least one day as well, na, it is okay. If it is the business, then the one day income is going to be taxable under the head PGBP. It does not mandate you. This particular chapter does not mandate you to carry on the business for the full accounting year or the full previous year. They just want you, if you are earning any penny from the business or profession, then it is going to be taxed under the head of business or profession, whether that particular business is in existence or not in existence at the time of assessment year. Understood? Or they also said that whether you are not owned, okay, you are not owning that particular business, but it is running in your supervision. If it is running in your supervision as well, your direction, your control as well, then also it is going to be taxable in your hands. Okay, suppose your father, okay, your father has a shop, okay, the grocery shop. Understood? Now he's not sitting on that particular shop. Okay, you go and you sit and you do the business. Okay, but you are doing each and everything in the direction and control of your father. You ask the rate of the pulses from your father. You ask whether I have to give this much discount to that particular customer or not. They're asking your name. Okay, everything you are asking from his direction or control. So the income what you are earning, so the profit that you are earning is going to be taxed under the head of PGP in the hands of your father and not your hands. Understood? So he's the owner personally, but not sitting at that particular business. It is running on his direction and control. Then also it is going to be taxed under that, under your father's income. Understood or not? These all 4 points have been clear to you. Tell me that first. Now, the charge is not on the gross receipt, but on the profits and gains. They are not charging you the turnover. They are not charging you based on the turnover. What they are charging, the profits and gains. Therefore there are certain deductions and losses that is allowed under this particular chapter, because if they are not charging the turnover, means they are charging only the profits and gains, because the chapter itself clear na, the profits and gains from the business of profession. They are not charging that your top line, they are charging your bottom line. So if they are charging your bottom line, so from top line to bottom line, what is the expenses that to be reduced now? So they will particularly give some deductions. They will particularly say that this kind of expenses will be allowed. So all these things will be allowed. Okay, now the illegality of business, profession, or vocation does not exempt its profits from tax. Whether that particular business is illegal, whether that particular profession is illegal, vocation is illegal, that does not matter. If you are earning now and it is your business, whether it is illegal in the eyes of the law, whether it is illegal, but you are earning the profits now, then it is going to be taxed under the head of PGBP itself. It does not, the law does not say that it is illegal business, it is not allowed now, so we are not taking the tax. Arey no, if you are doing the business, whether it's legal or illegal does not matter to me. If you are doing the business, you have to pay the taxes. Whether legal, illegal, that is a matter of the court. They will decide. That is a matter of the other department. They will decide. But for the income tax department, they are saying that you are earning the money. That's it. It's my department. I am going to take the tax. I does not take into account whether it is a legal business or illegal business. But at the time of giving certain deductions, at the time of giving some deductions, they will disallow that. They will say that no, 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 we are not going to allow this particular expenditure because it is an illegal business. But taking the profits will be allowed as tax. Okay, they'll take tax on the profits. However, the expenditure incurred by an assessee, which is prohibited by law, would not be allowable as deduction. They'll not give you the deduction of the expenditure that is done on the illegal businesses, which is not permitted by the law, which is a prohibited by the law. They are not going to provide the expenditure deduction of that particular income. So, whether do you understand till now what is the meaning or in profession? Meaning of business and profession and meaning of profits. Understood? Tell me that. Shall I move forward now? Yes. There is a section called section 28 which talks about the chargeability of the chapter PGBP. Now what is this chapter? What is this section talks about? Understand it very carefully. See, how do we get to know that this particular income is going to be taxable under the head PGBP, or this particular income is going to be taxed under the head salary or house property, other sources, capital gain? How do we get to know that this kind of income that I am earning is a part of PGBP? This kind of a business I am earning is a part of capital gain. This part of a earnings which I am earning is a part of other sources. How do I get to know? For that, there are always a chargeability section, the charging section, which is known as what? The charging section. This is usually the first section of that particular chapter. Our income tax has been divided into the various chapters now. Yes, out of that particular chapter, there is a chapter called PGBP. Okay, in that particular PGBP chapter, there is a first section which talks about the chargeability of the income. Okay, chargeability under the PGBP. What does it talks about? It gives a comprehensive list and says that if any of the business that you are doing out of this particular list, then it is going to be taxed under the head PGBP. So they are giving you a list that you are doing these kind of a business, then please come under the under the head PGBP, and your income is going to be taxed as per this head only. Okay, and same likewise, they have given a chargeability section under the head capital gains. They said that if you have done these work, then your income is going to be taxed under the head of capital gain, and all the provisions of the chapter of the capital gain will apply to you. Understood? So there is one section that talks about the chargeability, like why we come under the section under the chapter PGBP, because the section number 28 mandates you that if you are earning these income, then it is going to be taxed under the head of PGBP only. Understood? So, starting with the first point, what does it say? It says that income arising to any person. Who is the person? Understood or not? In chapter number 1, person's definition, 2 clause 31, understood? Yeah. By way of PGBP, by way of business or profession, carried on by him, okay, at any time during the previous year. At any time during the previous year. Earlier, just as of now, we have completed the discussion that you do not need to carry on the business for the whole accounting year. If you are doing the business for the one day, for 2 days, for 10 days, and you are doing the business or profession and earning anything income that is arising from that to any kind of a person, we are not saying only to the individuals, we are not saying only to the HUF, you are any person, be it company, AJP, AOP, BOI, anything, and you are earning from the business or profession at any time, that too in the previous year, because whatever you are earning in the previous year is going to be taxed under the head and going to be taxed in the assessment year. So whatever you are earning in the previous year now, that to any kind of, it does not matter, any kind of the business will also be going to be taxed under the head of PGBP. Understood? So first point is very much clear to you or not? Yes. Now, there was a ambiguity in this particular point, which was further clarified, okay, by the department and the finance ministry itself in the budget. What they said that, however, income from letting out of a residential house or part of the house by the owner is chargeable under the head income from house property. That you have already understood that the letting out businesses, like in the first chapter, the basic concept chapter, I have taught you now that there are two kind of properties. First is a self occupied and second is the let out property, and all those are taxable under the head of income from house property, that we have already seen in the last part of the basic concept chapter. Yes, so it is going to be taxed under the head income from house property, that we all know. From intermediate, we are doing the same treatment and not under the head of PGBP. Correct. But this is the general law that we have seen. This is the general law that we have seen. What they are saying, that they are just clarifying it, that if you are a owner, okay, and you are earning the profits by letting out of the business, and it is going to be taxed under the head of PGBP. There is a suppose there is a company, okay, there is a company whose work is what? Whose work is to sell out the property or to provide the property on the leased out basis. They have purchased a property. Suppose they have purchased the 60 flats. Okay, now their job is, that particular company's job is, that particular memorandum of associations, article of associations specifically says that this company is formed for the objective to provide the residential houses on lease or selling that particular lease, on lease only. Okay, suppose its business is to provide the property is on lease itself. So whether that particular income should go under the head of PGBP or under the head of IFHP, house property or PGBP, tell me that. If I am providing the residential houses, suppose, listen to me very carefully, I am providing the residential houses, and okay, and it is the owner who is providing the residential houses on the lease, then it is going to be the head PGBP only. But in the case of Chennai Properties and Investment Limited, they say that if it is written in the MOA, Memorandum of association, that is the main objective of the company, is to acquire and let out their movable property, and income arising of such property is substantial, means it is the main business of the company. Then the income from such property shall be taxable under the head of PGBP instead of IFHP. समझे क्या? Understood or not? Tell me that. If it is my business only, then the income which I am earning is from the business, not as an individual. Suppose I am the individual, okay? I have one house property, because the two house property I can take. Yes, I have one house property. I am first acquiring it for the self-occupied purpose, self-purpose, okay? And my another property, which is vacant, I let out that particular property. So for me, that was not my business to let out the residential property. It is just I had some extra flat. I have just extra property, so I let out it. So for me, in my case, it is going to be taxed under the head of IFHP. That is income from house property and not the PGB, because it is not my business. But if there is a company whose memorandum of association itself says that it is the main object of the company to acquire and let out the property to the person, and my income and the company's income is substantial from that particular business itself, then it is a business, not a house property income. Okay, understood? Because it is my business, my memorandum of association itself says that it is my main business, it is my main object, so it is going to be taxed under the head of PGBP. Do you understand the difference between the two? Do you understand the difference between the two? If the company is there, then it should be PGBP, and if we like I and you do letting out some residential house, then it is going to be taxed under the head of income from house property. Understood or not? Tell me that. The first point is clear to you or not? Income that is arising to any person, be it any kind of individual, HUF, AOP, BY, AGP, company, okay, every artificial juridical person, local authority, everyone is going to be taxed under the PGP chapter, okay? And they have done the business at any time, we do not care. Any time in the previous year, we do not care. Okay, even for a single day, if they are doing the business, they are going to be taxable under this particular head. Clear? Is this point clear to you? Shall I move forward? Yes. Coming to the second point. This is a very interesting point. Okay, now understand it very carefully in under section number 28. That is a charging section. Listen to me very carefully, because I am discussing the point number 2 here. The first is discussed, I am discussing the second point. Suppose there is a company named ABC Private Limited, okay, has done a contract with XYZ Private Limited. There is a company, ABC Private Limited, has done some contract with the XYZ Private Limited to provide some raw material, to provide some raw material for his business. Okay. ABC Private Limited wants some raw material from the XYZ Limited for their business. Okay. Now, in the terms of an agreement, in the terms of the agreement between the two, it says that you have to deliver the particular goods within 50 days. Suppose within 50 days that you have to deliver the goods to us. If failed, if failed, then you have to pay the penalty. Then you have to pay the penalty of rupees 50 cr. Suppose of rupees 50 cr. That was written in the agreement. Understood or not? Now suppose after 45 days, workers of XYZ Private Limited went on strike. They went on strike for some purpose. Now, the owner XYZ Limited, XYZ Private Limited are sure that they are not going to deliver the goods in 50 days. They are not be able to deliver the goods in 50 days, so they need some more time. Okay, they need some more time, but if they do not deliver in the stipulated time, then they have to give the penalty of 50 crore rupees. So the owner of XYZ Limited went to the owners of ABC Private Limited and want that whether this particular contract either terminate it, and we will enter some into a new contract. Okay, or I want some modifications to be done in this particular contract, because I am not able to give you the raw material within 50 days, so kindly extend the days to 60 days, or at least 65 days. Okay, so they want just simple modification. Either they want the modification, or they want to terminate the earlier contract and enter into a new contract. But what all the things are doing here is based on the agreement. Whatever it is written in the agreement, either we want to terminate that particular clause or to modify that particular clause. Yes or no? Yes. So do you do just tell me whether if you are the owner of XYZ Private Limited, will you do the same? Will you do the same? Either you will terminate or modify it. Yes, you can modify it, but you will say that I had loss for it. I had loss because of your strike. Okay, I have to deliver the goods within 50 days. Now I need 60 to 65 days. So it's the loss of the reputation of my business. So I can give you the extension. I can modify the business. I can modify the agreement. But for modifying the business now, suppose for modification or termination, ABC Private Limited asked for rupees 20 CR from XYZ Private Limited. Okay, ask, ठीक है, okay, we'll do the modification, we'll do the termination of the earlier contract, earlier agreement, but for that pay us 20 crore rupees, because it was a reputational loss for us. It was a reputational loss for us because of your strike, because of your mismanagement in the company. And XYZ Limited agreed by XYZ Limited, because they were earlier required to pay 50 crore rupees. Now they are settling in 20 crore rupees, and they are very much sure that they are going to deliver in 60 to 65 days. Understood? So the question arises here: this particular 20 crore rupees earned is going to be taxed under which head? Text under the head, which head? See, whatever raw material that is given, okay, the income that he will earn, that is the XYZ Private Limited, it is based on the business. So whatever the income that will be earned by the XYZ Private Limited from ABC Private Limited, it is going to be taxed under the head of PGBP, because it is based on the business. But now this termination or modification, that is a change in the contract. If I am doing any kind of a change in my contract, and for that some compensation is received, from the XYZ Private Limited to the ABC Private Limited. So whether it is going to be taxed under which head? This is the question. So the law says that it is received in terms of the business itself. Now, if there was no business, so there will be no question of modification or termination of the agreement. So it is based on the business now. So this compensation that you are receiving, it is in terms of your business. It is in line in your business. It is essential for your business. So it is going to be taxed on the head of PGBP itself. It is going to be taxed on the head of PGBP itself. Understood or not? So what are important? First there should be an agreement. There should be an agreement, and you want to modify or terminate. For that you are earning some compensation. So that particular compensation is going to be taken to the head of PGBP. Whether you understood this point, tell me that. Understood? Shall I move forward? Any compensation in connection with the termination or modification of the terms and contract of any contract, that is an agreement which is relating to your business. Accordingly, any compensation, whether revenue in nature or capital in nature, they specifically say, as per the normal rule, only the revenue nature of compensation is allowed. But here they have specifically said that whether the compensation is revenue or capital in nature, we do not care. It is going to be taxed under the head of PGBP. With termination, modification of terms and contract of any business, contract shall be taxed under the head of PGBP. Now, what is an example? See, compensation with respect to termination, modification of the employment contract is taxable under the head salary. If it is an employment contract, na, see, if it is an employment contract, so the employer-employee relationship must be there for the contract, employment contract. So where it is a employee-employee relationship that you have seen under the head salary, then it is going to be taxed under the head of salary itself. Yes, but see, point number two, it is related to the business. So if the contract is related to the business only, then it is going to be taxed under the head of PGBP. But if it is relating to the employment contract, then it is going to be taxed under the head of salary. Okay, if it is paid by the employer, or otherwise such amount is taxable under the head of IFOS. That means if it is not relating to the business, if it is not relating to the employment contract, then whatever the changes in the termination of changes in the terms and contract of any kind of agreement, then it is going to be taken under the head of the residual head, that is the IFOS. That is IFOS. Understood this point? Tell me whether it is clear. Very much clear to you. If it is relating to the business, it will go under the head PGP. If it is not related to the business but related to the employment contract, then it is going to be taxed under the head salary. Otherwise, it is going to tax under the head of IFOS. Understood? Easily. Do you have any problem till here? Tell me that. Clear? Now, moving forward to point number three. Income derived by a trade, professional, or similar association from specific services performed for its member. Now, coming to the point number three. I have to explain this in detail. Suppose there is an association of lawyers. Association of individuals will be called what? Body of individuals, that is a BOI. Correct. Yes. Now, what happens is is a member of there is a member of this association, that is, suppose Mr. Shyam. Mr. Shyam was a member of that particular association. Now, Mr. Shyam has done some wrongdoings in their business, okay, and he got a notice, that is a legal notice sent by some person on Mr. Shyam of his business. Understood or not? Now, association of lawyers has just had just the work that they do. What they do, they just discuss what is coming on in the laws. Okay, how do we approach in these cases, etc., etc. These are just association of the lawyers. That's it. Okay. Now, Mr. Shyam had the legal notice, and he wanted that this particular case will be tackled by the most decorated lawyer of our nation, is Mr. Harish Salve. Sir, Harish Salve. Okay, he want that he should fight my case. So he approached Mr. Harish Salve, and Harish Salve refused to meet. Okay, but he want that he should fight my case. But he is the member of the lawyers of association of lawyer. So now, after getting the rejection from Mr. Harish Salve, okay, Mr. Shyam went to association of lawyers and said that, see, you are an association now, you have some reputation. If you go and say to Mr. Harish Salve that please fight the case of our member, that is Mr. Shyam, then it is very much helpful for us. If you say, because you are an association now, so Mr. Harish Salve also a lawyer and advocate, so he'll listen to you now. He'll not listen to me in my individual capacity. But when you, as an association, approaches him, then he might listen to you and he will fight my case. So the association of lawyers is providing a specific services, is providing the specific service to Mr. Shyam, who is the member of the association, And when the association of the lawyers approached Mr. Hari Salve, so he agreed. Okay, so for that, to provide this particular service to Mr. Shyam by the association of lawyer, the Mr. Shyam paid rupees 10 lakh rupees. Suppose Mr. Shyam paid rupees 10 lakh rupees to provide this services, which is a specific services. They do not provide this kind of a service to approach someone, to do the lobbying for someone, okay, on behalf of the member. They usually do not do all these things. But because of Mr. Shyam, who is the member of the association, they provided specific services to Mr. Shyam because of the need of him. Okay, so they are providing the specific services. Generally, they do not provide this kind of a services, but also providing the services to its member. First is specific service, not the general services. They are not providing the general club services. They are providing a specific services of lobbying to Mr. Salve on behalf of Mr. Shyam. Okay, so they are providing the services, specific services of lobbying, okay, to his member. So for that they are charging what? Rupees 10 lakh. So the question arises, in what head this 10 lakh is going to be taxable? This 10 lakh is going to be taxable under the head of PGBP, under the head of PGBP. Understood or not? Tell me this. Understood? Tell me this. See, income derived by trade or professional or similar association, whether they are income, the income which is derived by trade or professional or similar association, we have seen the professional association, that is the association of the lawyers, for specific services performed for its member, whatever the income they are earning from it, now they are going to be taxed under the head of PGBP. Are you clear with this? Income derived by a trade, professional, or similar association from specific services performed for its member. See, if you feel that speed is slow, you can increase your speed, but I don't want to hurry up or rush in any manner. So that is why I'm going very slow. Okay, if you find that my speed is slow and you can hear me, you can adjust with me, and you can understand everything with a higher speed, so you have the option to increase the speed, but I have to go in the slow manner, because everyone I have to tackle every one of you. So if someone wants to go slow, then it is my responsibility. Okay, the speed option is there, you can increase the speed. Okay, but I'll go with this speed. Now, moving forward, profits from sale of import entitlement license. Now, what is the import entitlement license? That we need to understand it very carefully. Okay, we are going to study point number 4. We are going to study point number 4. What is an import entitlement license? Suppose there are some restricted goods. Okay, suppose there are some restricted goods, which is a gun shelf. Okay, there is a gun shelf, or let me say not gun shelf, or let me take an example, missile equipments. Missile equipments. Okay, the government wants the missile equipment. For them there are certain companies. Okay, now this is a restricted item. Everyone cannot import the missile equipment. Understood? It is very much clear that everyone cannot import the missile equipment, which we need to import something. Okay, so for this purpose there are certain entities. Okay, for this there are certain entities who do these kind of a business, for which the government allowed them to do the businesses. Okay, suppose there is a HAL, Hindustan Aeronautics Limited. Okay, or suppose there is a Tata. Okay, they also provide certain kind of military equipments. Understood? Suppose these are the two companies which provide what? Missile equipment to the government. Or there could be any kind of other companies. Instead of Tata, let's take another example of DRDO, DRDO. Okay, these are the two organizations which can import the import entitlement, which can import the missile equipment. Okay, now suppose what happened, the government said that you can import 20 lakh rupees of the 20, uh, or suppose 200 crore rupees of the missile equipments, and DRDO you can import 300 crores of the missile equipment from the foreign. Okay, this was done. Understood first of all this thing. So the government said that to acquire the missile equipments, HAL you have the license to import 200 crore rupees of the missile equipments, and DRDO you have the license to import 300 crore of the equipments. Okay, but now suppose there is a year where the DRDO gets more order. DRDO gets more order from the government. DRDO got the more order from the government, and HAL does not have such orders. So the HAL used only 100, suppose the HAL used only 150 CR of the import whatever the import license that is given to the HAL, that is you can import for 200 crore, they used only 150 crore because they do not have such orders. But they want to acquire 350 crore rupees of the missile equipment because they got more orders, but they have the license of 300 crore only, but they need 150, sorry, 350. So there is an excess 50 crore rupees of the license that they want. So instead of going to the government, they said that HAL, listen, you have excess 50 crore license na, you have excess 50 crore license na, and I need that 50 crore license. So can you please transfer that license to me? Can you please transfer the license in my name, that I can order? Okay, I can order this particular 50 crore rupees of the equipments, and the HAL transferred that, and HAL transferred that particular license in the name of DRDO. So for that, whether HAL will do the same, HAL will do the same free of cost? No, they will charge something. Okay, for that, suppose they charged 2 CR. Suppose they charged rupees 2 CR. So the question is that whether this 2 CR, which is for the transfer of import entitlement license, means entitling a person to import something. Import entitlement license is what? A license which entitle a person to import something, okay, which they got for 200 crore and 300 crore from the government. Now the HL is transferring that import entitlement license in the name of DRDO in rupees 2 CR rupees, in rupees 2 CR. So now the question arises, what income, the income which is earned by the HAL in terms of transferring of the import entitlement license to the DRDO, whether this 2 crore rupees is going to be taxable under which head? It is going to be taxable under the head of PGBP. It is going to be taxed under the head of PGBP. Tell me that whether it is clear to you. See, profits on sale of import entitlement license, whatever the profit you are earning from transferring or sale of import entitlement license, it is going to be taxed under the head of PGBP. Is this clear to you? Tell me that. Shall I move forward? Same things are here as well. Cash compensatory support received or receivable by any person against exports. The government wants that the export of India should increase. Yes, the government wants that the export of India should increase, so there the deficit should be reduced. Exports are increased, then our balance of payment will be in the good position. Okay, so the government want to increase the exports. Okay, for that particular thing, they are giving the support to the exporters. They are giving the support to the exporter in the name of that you we are promoting the exports to we are promoting the exports. So they have provided some support in a cash format. They have provided some support to the cash format, that if you are exporting these kind of a goods now in the foreign, then we are giving you this much kind of a subsidy. Okay, which is in the cash format, because the word is written as what? Cash compensatory support. Any other kind of a support is not covered here. What they are saying that if you are exporting this much, if you are exporting this particular item, then we are going to provide you cash in a compensatory support, that you are doing the good work, that you are doing the export and increases our country's reputation. Okay, all these are things are done. So the company which received the cash from the government in the form of support, the cash is going to be taxable under the head of PGBP. That cash is going to be taxed under the head of PGBP. So in one format, they are providing you the support, but taking away the 30% from you as well in the form of the taxes. Is this point clear to you? Shall I move forward further? Same way, from point number 4, there is a point number 5, and same way the point number 6 comes, which says that duty repaid or repayable as drawback under customs. Under custom, you need to pay the custom duty. Yes, but you are doing the some good work. You are doing the export business. So, or you are doing the import. Okay, which is required by the government. So, in certain cases, the government said that okay, if you are doing the export of these items now, so we will not charge you duty. We will not charge you duty. So, whatever the in duty they have charged, either they will repay it or repayable. That either they have repaid it or they are going to repay something, so it is going to be your income now. It is going to be your income, that you are going to receive something. Okay, so for that, whatever the repay that duty that is repaid or repayable as a drawback, okay, it is going to be taxable. It is going to be taxable. It is known as what? Duty drawback. It is known as duty drawback, that you will learn in the customs in the IDT. Okay, so there is a term called duty drawback, that it is repaid or repayable, then it is going to be taxable under the head of PGBP. So the government is not leaving you from any angle. Whatever things you are earning now, give tax to us. If we are supporting you now, also give tax to us. If we are supporting, then also give text to us. And the same way, point number 6, point number 5, 6, 7, these all are same. See, point number 7 now, any profits on transfer of a duty entitlement passbook scheme or a duty free replenishment certificate, these are the certificates of the customs. Okay, so if you are earning by transferring these things, then it is going to be taxable under the head PGBP if you are earning any profits from it. This is same like point number 4. This is same like point number 4. Understood? These are just different kind of a things. Two things are from the customs. Okay, the customs and the export related things are also going to be taxable. Okay, if you are transferring anything now and earning profits, it is going to be taxed under the head of PGP if it is related to your business. See, exports is related to your business now. Duty entitlement and all these things are based on your business now, so it is going to be taxed under the head of PGPP. Whether this much is clear to you, tell me that this point is clear to you. Shall I move forward now? Yes. Point number 8. It says that any gift, benefit, or perquisite arising due to the business or profession, whether convertible into money or not, in cash or in kind, or partly in cash or partly in kind, then also it is going to be taxable under the head of PGBP. To understand this particular thing, let me give you an example. Let me give you an example. Point number 8. With the help of example, it is very much easy to understand something. Okay, so point number 8, I hope you are making all these notes. I hope you are making all these notes. If you are not making, kindly stop me and write it. Okay, because you have to write, you have to make your own copies. Now, coming to point number 8, there is an insurance company, that is a LIC. They have various commission agents. Yes, so there is an agent Vinod. There is an agent Vinod. Okay, LIC says that if you sold the policy of 2 crore rupees, if you sold the policy with a premium of 2 crore rupees, then we are going to give you the trip to Thailand. We are going to give you the trip to Thailand. If you sold the 2 crore rupees premium of the policies, then we are going to give you the trip to Thailand, and that too in 3 months. That too in 3 months. You have to sell the premium policies of the premium of 2 crore rupees in 3 months, and we'll give you the trip to the Thailand. Now, suppose Mr. Vinod achieved the target. Mr. Vinod achieved the target and he got the trip to Thailand. He got the trip to Thailand. So, this trip to Thailand is relating to the agent Vinod business, because his business was to, he is the agent, he is the agent of LIC. So, his business was doing the earning the commission from the by selling the policies, and due to that he is earning some gifts in the form of cash kind or partly in cash or partly in kind. Okay, there could be either cash paid, either kind, that is the trip to Thailand, or either they say that we will pay some cash plus we will pay some kind. Okay, so it is in cash kind or partly in cash or partly in kind, there could be anything. Okay, if they had done that much, okay, it that Mr. Agent Vinod has achieved the target within 3 months and he got the trip to Thailand. So whatever the cost of the trip to Thailand which the company has incurred, okay, that is going to be taxable in the hands of agent Vinod. That is going to be taxed in the hands of agent Vinod. But if it is given cash, suppose the company LIC says that instead of trip to Thailand, we will give you 10%. Suppose of the 2 crores of the policy that you have made, suppose we will give you 20 lakh rupees. We'll give you what? 20 lakh rupees. Okay, as a commission, as a incentive. So that 20 lakh rupees is going to be taxable in the hands of Mr. Agent Vinod. Okay, some way the company can say we will pay you 10 lakh rupees, okay, in cash and the trip to Thailand. And the trip to Thailand. So there are two components mixed. The cash is also given and the kind is also given. All these are acceptable. All these are acceptable, and all these are going to be taxed under the head of PGBP only. Understood. So Mr. Agent, so Agent Vinod, the Mr. Agent Vinod got the trip of to the Thailand because of his business, because of his business. That is why it is going to be taxed under the head of PGBP. Understood. This is what it is written, that any gift, benefit, or perquisites arising due to the business or profession, whether convertible into money or not. See, the trip to the Thailand is not convertible into money, na, but we can see what is the cost of going into the Thailand. Okay, what the facilities they have provided, what is the fair market value of those facilities. By that we can convert it in cash or in kind, or partly in cash and partly in kind. Understood all these three things. Now there is a question point in the question, in your question bank there is a question that in which there is an adjustment which says that gold jewelry valued at 30,000 rupees, valued as gift from the manufacturer from achieving the sales target. Okay, manufacturer is giving for achieving that sales target. Sales target achieve for achieving that sales target, they are giving you the some gift which is a gold jewelry whose value is what? 30,000 rupees. It is based on the business or profession or not. Okay, because they have achieved the sales target. So this 30,000 rupees is going to be taxable under the head of PGBP. Okay, because someone can say that it is received as a gift now. So we have studied that gift is going to be taxable under the head of IFOS, that is the other sources. No, it is received based on the business or profession now. If it is related to the business and profession, so it must go under the head of PGPP itself. Tell me that. Is this point clear to you? Is this point clear to you? Clear? Shall I move forward now? Further, I should move. Yes. Point number 9. It is very interesting point, which is that any interest, salary, commission, bonus received by a partner from the partnership firm. If the partnership firm is giving what? Interest, salary, commission, or bonus to a partner, then in the hands of the partner, it is going to be taxed under the head of PGPP, because it is earning because of the business. It is their business income, it is their professional income. Okay, so it is going to be taxed under the head of PGBP. It is very much clear. Now sir, they have written income, they, sorry, interest, they have written salary, they have written commission, they have written bonus, but they do not written profits. They do not written profits. So why the profits are not written here, why it is excluded? Because there is a section called section number 10 to A. Section number 10 2A, which says that whatever the profits is received by a partner from a partnership firm will be exempt in the hands of the partner, and it is going to be taxed in the hands of partnership firm itself. So there is a concept, okay, there is a concept, that is a fiscally transparent entity. What it is, what does this term called fiscally transparent entity, we will see in the model tax convention chapter, okay, where it is explained in detail. Okay, so as of now, just listen to me very carefully, that section number 10 to a came into picture, which says that any profits, any part of the profits is received by a partner from a partnership firm is going to be taxed under the head of PGBP, not anything else. Interest, salary, commission, bonus will be taxed on the head of partners only. Only the profits, only the part of the profit that is received by the partnership, received by the partner from the partnership firm is going to be taxed under the head of PGBP. So that is why it is not written in the point number 9. Understood or not? That a partner share in the total income of the firm will be exempt from tax. It is going to be taxed in the hands of partnership firm. Now understood? Now, sir, we have listened, we have understood that there are two kind of contracts, the interest and salaries. Interest and salaries, we have just studied in the C intermediate. Then there is a section which puts a restriction on the interest and salary of a partner, that you cannot pay 12 more than 12% of the simple interest of the 12% of the interest to the partner. You cannot pay more than that. Okay, we have also studied a restriction on the salary, that up to this you can pay this, up to this you can pay this, based on the book profit. So what are these things? Yes, these are as per section number 40V, that is interest and salary is put at the on the government has put the cap on interest and salaries, that not after belong beyond this particular limit that we have said, you cannot pay the interest or salary. If you are paying it, you can pay it, but we will disallow it and add it in your income, and you have to pay tax on it. This is clear to you? So it is a interlinking point. Point number these 3 points are the interlinking point. That from point number 9, you will learn point number of section number 40b. You also got to learn about 10 to a, and there is a section called TDS under section number 194T. So whenever we go into the chapter of TDS, you will find this particular chapter, this particular question, that TDS under chapter number, under section number 194T, which says that if the firm will also deduct the TDS at the rate of 10% if they are paying something, that is interest, commission, interest, salary, commission, bonus. If they are paying above 20,000 rupees, then they are going to deduct the TDS as well at the under section number 194T at the rate of 10%. So after concluding everything, whenever your syllabus will be completed, you have read the full PGP, you have read the TDS, you have read the other parts of the syllabus. Then whenever you will start reading in your books, okay, at your exam leaves, then these particular interlinking is going to help you a lot, that what is all related to these particular things. Clear or not? Tell me that. Is this point clear? Shall I move forward from point number 9 to point number 10 now? Tell me. Shall I move forward to point number 10? Now coming. Before moving to the point number 10, there is a let me complete point number 11. Point number 10 is a little bit lengthy, so I'll explain it. Just cover the last three parts very easily, then we'll come to the point number 10. Point number 11 says that any sum received under a key man insurance policy, including sum allocated by way of bonus. There are certain key man persons in our company, like CEO, CFO, COO, CS. All these are what? Key men of our company, because if they leave, it is very much difficult for us to run our company. Okay, so these are some key men to run the companies. Okay, because the labor can come, labor can go, there is no issue, there is in abundance, the labor is in abundance. But but the person who understands my business, the person who knows how to run this business, the person who knows how to grow this business is very rare. Okay, so these are what the key men of the person, that without that our company is nothing. Our company is nothing. So for that particular thing, na, what we do, the company provide various facilities to that particular key person so that he should not leave our company. So they provide various kind of facilities. So out of those facilities, there is one facility which is a keyman insurance policy, that we have taken an insurance policy on our particular keyman, that if something happens to our keyman, at least the company is got compensated, at least the company got compensated. So we had some keymen. Okay, for that we have taken some insurance policy. Now it is very much understand, it is very important to understand that suppose on the maturity of the policy, on the maturity of the policy, if that particular insurance policy, the matured amount including the bonus received by the director, if it is received by the director, that it is, the company said that we have done the policy on the name of the keyman, so give it to the director itself, then it is going to be taxed under the head which head? Tell me. Salary. Because received by the director, it is going to be salary. But if the company received it, if the company received it, then it is going to be taxable under the head of PGBP. If the company is receiving the amount of the maturity amount on the Keyman insurance policy, then it is the PGP. If the director is receiving it, so it is in the it is in the nature of employer-employee relationship, then it is going to be taxed under the head of salary. But if it is received by any other person, like director's wife, who is not in relation with the company as an employer-employee relationship, okay, and he's not a employer-employee relationship, so the amount, it should not go under the head of salary. It is not the business of the wife, so it should not go under the head of PGP itself. So it is going to be in the hands of who? Suppose in the hands of sorry, going to be taxed under the in the hands of wife under the other sources, under the other sources. First point. Suppose second point, there is a independent director. There is a independent director, and if you know, if there is an independent director, there is no employer-employee relationship between the director and the company, because they are the independent directors. So there is no employer-employee relationship, and the company is not receiving the amount, the company is paying the keyman insurance maturity amount to the independent director, but there is no employer-employee relationship, so it should not go under the head salary. Okay, the company is not receiving it, so it should not go under the head PGVP. So whatever the amount which is received on the maturity of the keyman insurance policy by the independent director, then also it should go under the head of other sources as only, because if there is an employer-employee relationship, then should go under the head of salary. If the company is receiving it, then it is going to be taxable under the head PJP, or otherwise anyone is receiving, it is going under the head of other sources. And whatever the company is paying the premium, whatever the premium the company is paying, the company will get the deduction of that particular premium. They can reduce their profits by that particular premium, whatever they are paying for the Cayman insurance policy under section number 37 and 37. Okay, now we have seen the director or the company relationship, where the partnership firm can take the policy in the name of the partners. Yes, they can also take the they can also take the policy in the name of their partners. Okay, all these are written here. Premium paid by the company is allowed under section number 37 is deduction. KIP, that is a Keyman insurance policy for the partners, are also allowed. And taxability for the Keyman insurance policy is what? If some received by the company is going to be PGVP. If some received by the employee on retirement, taxable under the salary. Okay, some received by other member who is not in the employer-employee relationship, then it is going to be IFOS, which is an example is a independent director. Okay, the point number 11 is also clear to you. Tell me that this point is also clear to you. Shall I move forward? Point number 12. Fair market value of the inventory on the date of conversion or treatment as capital gain. This is capital asset. This is going to be understood in the capital gains chapter. In the capital gains chapter, I'll make you understand one concept, and after that you will see now, you will appreciate why this point number 12 came here. Okay, in their one case, we will see that when a when a asset is transferred into a stock in trade, then what is going to be the taxability? So there are two kinds of taxability. I just let me tell you in brief. If you know, otherwise we'll see in the capital asset chapter. If there is a capital asset, what is the capital asset? Do not ask me as of now. Okay, if there is a capital asset, is converted into stock in trade. So whenever this particular stock in trade sold na, so there are two kind of calculation. You will calculate the capital gain as well, and you will calculate the PGBP as well. So capital gain taxability is given under the head of capital gain. Okay, the chargeability will be given under the capital gain, but it is also going to be taxable under the head PGBP na. So this is why point number 12 came, that the fair market value of the inventory on the date of conversion or treatment or a capital asset. So we will understand this particular section, then only you are going to appreciate the point number 12. Otherwise you are not going to appreciate it as well. So the point number 12 you can keep it on hold. Whenever we will do the capital gains chapter, that is afterwards, after this particular chapter, then you are going to grasp it very well. Understood? This is point number 12 that you keep, that you have to keep in abeyance. Now, point number 13, which says that any sum received or receivable in cash or kind, either you have received it or you are going to receive it. Okay, in cash or in kind, on account of any capital asset. Okay, that is suppose in respect of the expenditure on such capital asset has been allowed as deduction under section number 35 AD, being demolished, destroyed, discarded and transferred. So if we leave this particular bracket because we do not know what is section number 35 AD, you do not cut it. You do not cut it because it is relevant, but as of now we do not know what is section number 35 AD. Okay, and the sum received or receivable in cash on kind, on account of any capital asset, on account of any capital asset. Whenever the word capital asset comes na, we do not know, we do not know, because these things will come under the head of capital gains, and we have read this, that read with section number 9b and 45.4 with the capital gains. Okay, the point number 13 will also be understood under the head of capital gain. The same thing there also, you will calculate the capital gain as well as the PGBP income. So that is why both the things will come. That is why these both the things are as for the capital gains. So once you understand the capital gain chapter, then you are going to appreciate these two things. Then you are going to appreciate these two things. So as of now, kindly ignore these two things. Now coming to point number 10. Now coming to point number 10. After explaining the point number 10, we are going to give you the break. Okay, because section number 28 is going to be over then. Then afterwards we are going to move forward for the speculation business. But if you want, you can take a 1 minute break, not more than that. Just read all these things till now, and then after 1 minute we can meet. Okay, so take a break of 1 minute, take a sip of water, and then come and we'll understand point number 10 in detail. Yes, shall I move forward to point number 10? Yes. Now coming forward to point number 10. To explain the point number 10, I have to make you explain by some examples. Okay. Now come and write some examples with me and understand with me. Suppose there are two firms. First is a XYZ Limited, and second one is a ABC Limited. Okay. These are two firms operating pan India. It is also operating the pan India, but they want to grow. Okay, but they are the competitors of each other. They are the competitors of each other. So what happened that XYZ Private Limited approached ABC Private Limited and said that, Acha, listen to me very carefully. What said that XYZ Limited that see, you operate in South India and I operate in North India. Okay, you do not enter in North India, I will not enter in South India, and we both will happily compete. We will both providing the same thing. Okay, happily compete, but please compete in South India, you compete in North India. We do not override our each other's zone. Okay, this is what they have talked about. They have made an agreement and reached to a conclusion that okay, we are not be the competitor, we shall not be competing each other now, we shall not be competitor to each other. What is I am writing? So it is what, so for that particular thing, XYZ Limited paid some, suppose, say, paid some 5 crore rupees, or might be 50 crore rupees, because the business is high. So they paid 50 crore rupees in the nature of non compete fees, in the nature of non-compete fees, which says that okay, we will not compete. Okay, this could be a one arrangement, there could be any arrangement. Okay, there could be another arrangement that the XYZ Limited says that okay, if you want to operate, you can operate, but do not operate in North India only. I am not going to leave anything, but you just do not compete with me in the North India. Take 100 crore rupees from now, take 100, 250, 300 crore rupees from now, but do not come and enter into a North India market. Okay, and compete in South India with me, no issues, but do not enter the North Indian market, and for that I am ready to pay you 300 crore rupees. If this was the agreement also, then it is what a non-compete agreement, that we do not want to compete each other, that is why we are paying something amount to you, which is paid, suppose 50 cr. Okay, if this 50 cr is paid as per the non-compete agreement, then it is going to be taxable under the head of PGBP, who is going to receive it. Understood or not? This is the first point. Second point, suppose, it is first point A. Now come to second point. Suppose there is a company XYZ Limited. They developed chemical formula which will which will reduce your age. Which will reduce your age. It is a formula that is made by the XYZ Limited. Okay. Now, on this particular formula, there are certain scientists, the reverse engineering they have done on their age. So there are certain scientists who know that particular chemical formula because they have worked on it. So now the XYZ Limited has entered into an agreement with the scientist that this particular chemical formula, cannot you cannot share with anyone. You cannot share this particular chemical formula with anyone. It is an agreement, and for that, take 10 crore rupees from now. Take 10 crore rupees from me, but do not share any kind of this formula of our company to anyone else. If they share some chemical formula, so another company can come up and they can give the competition to the XYZ Limited. So for that, the XYZ Limited has done a contract with a scientist that please do not share the formula of this particular chemical to any other company. So for that, this 10 crore rupees which is received by the scientist is also going to be taxable under the head of PGBP. It is also going to be taxed under the head of PGBP, and it is known as what? Non-sharing fees. It is going to be called as non-sharing fees. Please do not share our formula with anyone. So for not sharing anything, if we are paying something, then it is going to be taxable under the head of PGBP. Tell me that whether it is clear to you. Now, with the help of these both examples, can you read any sum, whether received or receivable, either in kind, cash, or under any agreement. Okay, it is not partly in cash or partly in kind. What they have written, either received in cash or in kind, okay, under an agreement. So there should be an agreement whether the sum is received or going to receivable, okay, for not carrying out any activity in relation to any business or profession, that is a non-compete. Please do not carry out the business in the North India. Okay. Point number B, not sharing any know-how, patent, copyright, trademark, license, franchise, or any other business or commercial right or similar nature or information or techniques likely to assist in manufacture or processing of goods or provision of services. It is a non-sharing fees that we have taken an example. Understood? So for the non-compete fees, non-sharing fees, if you are paying any amount, okay, under an agreement, then it is going to be taken at the head of PGBP. Understood? Now, for the recipient of the non-compete fees, for the recipient who is earning the income from the non-compete fees, then it is going to be taxable under the head PGP. But who is paying such amount? Like in our example, this XYZ Limited is paying is paying 50 crore rupees na. XYZ Limited paying na. So for XYZ Limited, by paying 50 crore rupees, he obtained the right from ABC Limited that they do not operate in the North India. So it is an intangible asset for XYZ Limited because they obtained the right. So it is an intangible asset. And if it is an intangible asset, then the depreciation at the rate of 25% will be allowed to the XYZ Limited, not the deduction. He is paying 50 crore rupees na. So it is not said that your 50 crore rupees is your expenses and reduce the 50 crore rupees from a PNL at a stretch. You do not do this, okay, because it is an intangible asset. And if it is an intangible asset, then it is added in your assets, and only 25% of the depreciation can be reduced from the profits. Okay, understood this particular thing. For this, it is an income, it is a PGP income. For this, it is an intangible asset, and you have to deduct the 25%. If it is already reduced, this 50 lakh rupees is already debited in your PNL, then you have to add it back because it is not a item that is allowed, and only 25% of the depreciation is allowed on that particular item. Understood or not? This is the thing we will see in the question and answers, and you are going to easily understand it. This is what it is written, that for the payer of the non-compete field, it is an intangible asset and depreciated at the rate of 25%. Now, this loss shall not be chargeable to PGP under the following circumstances. Means, if you are receiving a non-compete fees, if you are receiving a, sorry, if you are not receiving only the non-compete fees, then this clause is not chargeable under the head PGP. In what cases? If the sum is any sum received, transfer of right to manufacture or to carry on the business or profession, which is chargeable under the head of capital gain. If that particular sum is chargeable under the head capital gain, the capital gain says that it is going to be taxable under my head, then please do not come under the PGP, go under the capital gains. Understood? And second is what the carbon credits. Carbon credits is what it is, we'll understand under the 105 BBG. Okay, what is a carbon credits? It just means like a import entitlement license, that you are entitled to import this much of amount of the import of that particular item. It is what a import entitlement license. Same way the carbon credits is like you can emit this percentage of carbon into the nature, not more than that. There is a quantity which is given to you, if you are a business like that, so there is a credits which is given to you. Please do not emit these more than this amount of the carbon in the nature, because to fight the global warming. So these are what the carbon credit says. And if you are transferring that carbon credits, like I have the carbon credits for 200 suppose liters, or in whatever the quantity they are measured in. Okay, so suppose 200 liters they can emit it. Okay, but they are not emitting that much, they are only emitting 150 liters only. But another company had got some more orders, so they are just working day and night, and by that working, they want more carbon credits, because their own carbon credits are now about to reach. So for that, they contacted that company, the earlier company, took the 50 liters of the carbon credits in their name, that is a transfer of the carbon credits. Then whatever the compensation is received by the company which is transferring the carbon credits is going to be taxable under their hands. Okay, the same logic as the import entitlement license. Okay, understood. So by this we have completed a first page, a second page only. So two page we have completed, but these are the most crucial pages. Okay, we cannot leave on these pages. Now shall we move ahead or shall I take break? Yes, it's a time to take a break. Okay, so after a break of 5 minutes, we shall be meeting again and completing our further part of the chapter, whatever we can complete it. Okay, so shall we meet in the next 5 minutes? So, all the very best. Keep writing, keep revising. It is very much important. I am asking you again and again and again that keep writing, keep revising, keep writing, keep revising, and keep practicing as well. Okay, all the very best.